It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
40 to 50% in traditional assets such as stocks and shares, 40 to 50% in real estate, and maybe 1% to 5% in cryptocurrency. Because it is very volatile, if it drops by 50%, you don't want to be able to ruin your life.
And that is Jeremy in Brisbane on the Real Estate Breakfast this morning. We'll get back to that conversation in just a moment as we welcome you back to the end of another working week. Yes, once again, heading towards another weekend. Mortgage guru Anthony Landale is here tomorrow morning with the Saturday Morning Property Show. I hope that you have had one of those successful weeks regarding real estate, regardless of the ups and downs that might have presented themselves. It is a Friday, July the 18th, and good morning to you, Ross, a new listener in Perth. Now, you are a dad to a 24-year-old daughter. You say that you're helping out your daughter with the deposit, but your daughter wants to go in and buy a property with her girlfriend. You don't like that idea, Ross. You say that you love your daughter dearly, but you'd prefer to pay more of the deposit so she is the owner of the property exclusively. But your daughter is very independent and wants a smaller deposit from you. Well, first off, wow, your daughter doesn't really sound like the typical kids leaning on their parents for helping them with the deposit, which you can't blame the kids in today's market given the real estate conditions. So first off, much respect to your daughter for being this independent person that you say that she is. And you also wonder, you've asked us this question, if there are other parents who have emailed in with similar problems. No, you are the only person, Ross, that has reached out to us and told us your story. So what to do is essentially what you're asking. Only two decisions here, Ross. You either respect your daughter's wishes or you say, I'm not comfortable with you going in with your girlfriend, so I'm not going to give you the money, the deposit for the property. We all know that the second option, you're not going to do that. So option one is the only option. However, the crucial part, I would say, to getting this right is having your lawyer have a contract drawn up between the two girls that is watertight. What happens if this takes place, or God forbid something happens in this scenario? That is going to give you some peace of mind for covering off the unimaginable circumstances that we all know that can take place in this scenario. So good luck with that. Great to have you as a listener, and do let us know how all of that plays out. And similarly, if you are a parent in a similar situation to what we've just explained from Ross, let us know. Our email address is myrealestatepodcast@gmail.com. Well, right now, on our Friday morning, as we work towards the weekend, let's catch up with Jeremy Britton in Queensland. And Jeremy, good morning to you. I know that we spoke about a year ago. What would you do if you were Ross in that situation?
Mate, I'd be just conscious that everyone's 24, they think they know everything, but then when you get to 44 or 54, you realise that you didn't know a lot. And a mortgage is generally a 25 to 30 year commitment. So for those of us who are, sort of 40 or 50, how many of your high school friends are you still in touch with? Maybe 2% or 3%. Situations change, relationships change, marriages break up, friends don't stay friends for 25 years. So I'd be sticking with Ross and saying, hey, his bond with his daughter's never going to change. The girlfriend may change over time. So either have a rock solid contract or just say, he can give his money to the daughter. The girlfriend can rent perhaps until that situation changes. But yeah, it's a 30-year commitment. So you really got to make sure you've got a watertight contract and make sure who owns what, because, if they split up, break up, move on, one of them dies, it's going to create a lot of problems down the track.
Do you know of these types of younger people that have actually got the daughter's strong independence, clearly. I mean, you got to tip the hat off here, because it's easy to take the money, especially from parents. It's not so easy to say, Dad, I love you. I love the fact that you're going to put some money in, but I don't want as much money as you're prepared to put in for me to become this sole owner of the property. I mean, it's very unusual. Maybe it's not. It's just unusual to my ear.
That's a great thing. But, maybe Ross could be the co-owner of the property until such a time as she's got the finance or the equity to buy him out. Whatever works in their situation, I'd say it's strongly a conversation they need to have with their family lawyer, and just look at all the things that can possibly happen, which may include, if she's co-owner with the girlfriend and the girlfriend, unfortunately dies or moves on to another relationship or something like that, then that's going to throw an extra spanner in the works where she's actually a co-owner of a property. There's all sorts of things, and the lawyer's the best person to look at every single scenario and plug all those leaks before they occur.
Now, we spoke to you over 12 months ago. You are based there in Brisbane. You have got a property portfolio. For those that wouldn't have heard that podcast, just remind us, how big is your portfolio and what have you added to that, or if you have added to that in the last 12 months?
Yeah, so we've got 3 properties in Brisbane, a couple of properties in Byron Bay in New South Wales, and just in the last month, been looking at property in Bali.
Wow. Okay, tell us about that. That's really interesting, because we have had emails that have come through where younger people have decided to quit Australia and head off. We've had them moving to Bali, Vietnam, we got an email from. Cost of living, cost of properties, much, much cheaper.
That's right. I actually lived in Bali for 2 years in 2014 and 2015. The cost of living is significantly cheaper. You've got to keep a handle on things because there's always something going on. There's always parties. There's always friends coming over who are there for a good time, not a long time. The cost of living is 25 to 30% of what it is in Australia. But yeah, you have to keep a lid on things because otherwise, my friend lived over there for 3 years, but he ended up employing a driver to drop his kids at school and another person to go grocery shopping for him and another person to clean his pool and mow his lawn. And all of a sudden he had 9 staff and he wasn't actually saving that much money, but he was saving a lot of time.
2 properties. Just break those properties down for us in Bali. Can you give us some price points to make it more relevant?
I was renting a place for $250 a week. It was a 2-bedroom, 2-bathroom, a couple of 100 metres away from the beach in Sanur, Sanur. It's on the east coast, away from all the nightclubs and things, very family-friendly area. A foreigner can't own property in Bali, but you can take out a lease, like a 25 or 30-year lease. And at the end of that, you have to hand the property back. So what I'm looking to do is, I can lease the property fairly cheaply, and then I can rent it out to an expat, or I can put it on Airbnb and make significantly better returns than the normal, 5 to 7% that you might be making from real estate rental.
Okay, so you've got those 2 properties. Anywhere else around the world that you think you might invest in?
Not as yet, but I have holidayed in a lot of places, and that's how I got to live in Bali, is by holidaying over there a few times and making friends with a few people. So I lived over there for a couple of years, 10 years ago. I literally got back 2 days ago from Bali because I've been over there looking at more properties. But, Thailand, Vietnam, any of those places where an expat or a foreigner can actually buy or lease a property long term, and then somewhere that's a tourist destination where you can actually have, like an Airbnb or a Verbo or whatever they're called, a short-term holiday rental. It's good arbitrage. If you can pay, $300 a week for a place and you can put it back on the market for $200 a night.
Well, let's get down to where the real estate market cycle is from a property investor's point of view with a portfolio in 2025. How are you reading the market currently?
I'm looking at something called the economic clock. It's a tool that's 300 years old, and they've tracked every real estate cycle and every stock market cycle for the last 300 years in most major countries. So we have the situation where the government put up the interest rates because they were trying to deal with the inflation. The Reserve Banks realised they put up the interest rates too fast, which was leading into a recession. And now they're putting on, either pausing the interest rate rises or dropping them down. And the Fed in the US is rumoured to be dropping the rates in September. Australia will probably keep their rates on pause or drop them also to stay in line with the US dollar so the Australian goods don't get too much more expensive. And that means it's a good time to invest in other things other than real estate while the rates are sort of pausing. And perhaps this is where you look at short-term holiday rentals to increase your yield because the rents haven't gone up very much. Otherwise, you can diversify into something else other than real estate temporarily, such as stocks and shares or cryptocurrency, and then have a look again as expanding into property in probably 2 years' time when the interest rates come down further.
Now, you mentioned cryptocurrency. Is that a currency that you're either looking at the moment or have invested in?
I invested in Bitcoin probably again 10 years ago. It was about $600 or $900 at the time. It's now over $100 and something thousand. So it's an alternative. It's more risky. Obviously, you don't put all your money into cryptocurrency because the market did drop by 50% back in 2022. So, my thing, and this is not financial advice to anybody else, but my thing would be, 40 to 50% in traditional assets such as stocks and shares, 40 to 50% in real estate, and maybe, 1% to 5% in cryptocurrency. Because it is very volatile. If it drops by 50%, you don't want to be able to, ruin your life. But if it goes up by 100%, you want to be able to have some money in there and then say, if it's doubled, then you can take the bonus money out and then use that as a deposit on more real estate or, some blue chip shares, depending on where we are in the cycle.
Yeah, I hear people talking about Bitcoin and comparing it to gold and saying, it's very similar to gold, et cetera, except the fluctuations that Bitcoin has is nothing compared to gold.
Yeah, I think it's because it's a new asset that's only been around for 15 years. For the first 10 years or so, it was price discovery. We didn't know what it was worth. It was like when Amazon came out or when an internet stock came out. We didn't know, 10 or 15 years ago that we were going to be doing more than sending emails, doing video calls and things on the internet. Price discovery is sort of going up and down and fluctuating, but only in the last 12 months we've seen Wall Street buying in. So JP Morgan, BlackRock, Vanguard, Wisdom Tree, ARK Invest, all these big Wall Street firms have been buying cryptocurrency for the first time in 2024. The price is more stable because every time the price drops down by 5 or 10%, it doesn't keep going because retail markets panic, like the stock market. It's kept stable because the institutions are buying in. So same as when we have, like a plane crash or something, the prices don't drop as much as what they used to because you've got superannuation funds and big institutions who are buying stocks and shares and buying cryptocurrency now, whereas they didn't do that previously.
Well, great to catch up with you there in Brisbane. Good luck too with those properties in Bali. Thanks for coming on to the Real Estate Breakfast this morning.
Thank you.
Know Your Property. Available for breakfast from 6 a.m. Every morning from 6 a.m. across Australia, we deliver you the latest property news, commentary and predictions from Perth to Cairns and from Melbourne to Brisbane, 7 days a week.
And even something like a studio you say is a non-option. It's a non-starter. Now, whilst you say that your job is there in Sydney, I would do the counter-argument with yourself. If you moved into one of the regional areas, would you consider that?
Yeah, look, certainly I can only but imagine the cost of a studio unit in Bondi, but you can still buy a really nice, like a 2-bedroom unit with some floor space for under $500,000.
Yes, because I would imagine that there would be a number of people moving into the Fraser Coast that would take pay cuts to get onto the property ladder.
When you get to a point where it's just completely unaffordable, why would you want to try and endure a lifestyle around that when you can move regionally and maybe have a bit of a fresh start, I reckon. Qantas now and Jetstar, both of our two providers, are increasing their flights.
We connect you to the best real estate information across Australia. The Real Estate Podcast.